Right. That was almost like painless getting live tonight. I like it.
Oh, yeah. Did it go live on Facebook, though? That's the real question.
Yeah, I didn't get an alert. It isn't, so I'm assuming we're live on Facebook. There you go. Hey, welcome, everybody. I can see the notifications going out. Appreciate everybody being here. Welcome to HODL the Line. You know the drill. Here it is. Boom, boom. Smash them up. Share it out. Yeah. So, BC, what's good? How's things?
Things are good. Got done with my first week at school. Now it's on to the second week. So,
nice.
Ahead on all my schoolwork.
Nice.
We'll see if we can maintain that. Now my new job's finally scheduling me more hours. So basically tomorrow I get done with school and then I go to work, and I don't get done with work until like 9:30. So I'll leave my house at 8 and won't be back until 9 p.m.
Dang.
Long
I know
day.
those days, unfortunately, too well. Unfortunately.
I don't miss those days at all.
Yeah. So, I mean, it's nothing I haven't done before. It's just, geez.
Yeah, I know.
I'm kind of old now for it.
Oh, my goodness. Oh, my goodness. Yeah, exactly. Wait, where is it? Here. Yeah.
Yeah.
Okay. There you go. BC is now the old man on the interwebs. But how's it going, bud?
Busy. Got a lot done this weekend. Burned a lot. Cleaned out the garage for the most part. Had a funeral today. Come home and get set up. Get the laptop going. You know, copy, paste, and go. Go to like move the cursor like 3 inches to join the studio, and the fucking batteries died.
And we're busted already.
Just to get new batteries. So you know that was like a 1.5-minute excursion. So. Busy.
Okay. Let me make a note.
Make a note.
Yeah.
I was like a minute.
No, it was 2 minutes and 43 seconds.
I already sweared. Dang it.
Yeah, yeah, exactly. Welcome to HODL the Line, folks. Yeah. We got some stuff tonight, guys. We're going to be talking the national debt, amongst other things. I mean, it's not like we got anything national, you know. Come on, we got no debt. Let's be honest. There's nothing.
It's not global either.
Yeah, no, true. Yeah, no. Yeah. I that's all I got is with regard to that.
Well, all I gotta say is if you think we're bad, like, you know, other countries aren't doing so hot either. So
that's true. Let's be honest. The only reason we're even doing somewhat okay is because we're the world reserve currency. If it wasn't for that,
for a little, you know, I mean, it's
for a little while longer.
Yeah, it's slowly been decreasing my entire life. You know, we started out at like, I think it was like 80% in 1971, and we're barely above 50% now. So that's not too much of a, you know, global reserve currency.
Yep. And believe me, the world is trying to de-US dollar as quickly as they can.
I mean, can you blame them? Can you really blame them?
No, we should be doing that. I mean, let's be honest. Andy is already in the house. Welcome, Andy. Appreciate you being here. And I know we got a bunch of lurkers out there. Welcome. We're here every Monday night, 7 p.m. Eastern time. Talking all kinds of things. Although I will say suspiciously, AI has been kind of not so much on the docket. We were doing an AI binge there for a while. But stay tuned. Now that I said that, I probably just jinxed us. We'll be doing AI next week. But
Yeah, I mean, probably. I mean, you did just see that they did a whole robotic and AI summit in China, right?
I missed that.
No, so yeah, I just it was from last week and into this week. So
Oh,
I will
kidding.
have some articles over that for next week. So yes, we will definitely talk some AI and robots next week.
See, I didn't even know that, folks. So there it is. There it is. No idea.
Well,
Oh,
I was
man.
going to put the new video from Inside AI. He put the AI into military vehicles to see what they would do. And I thought about putting that in there, but there wasn't anything for AI. And I'm like, well, maybe one more week without
Well,
AI.
save that for next week.
There we go.
Save that for next week. Oh, man. Well, I think we're going to start off, BC, with the follow-up on ColdCard. Is that what you got queued up?
Yep.
All right. For those who don't know, we did talk about this breach last week. Again, it had nothing to do with anybody really hacking it. It was a flaw in ColdCard. Last week's live stream link is in the description. Go ahead, check it out if you want to see or haven't heard about it already. But they put out a firmware update, so BC is going to bring that up and we'll talk about it.
All right. Well, ColdCard ships firmware after $114 million Bitcoin theft. Says AI helped catch more bugs, because that's what you want to hear. Coinkite, the Canadian company behind the ColdCard hardware wallet, has released new firmware weeks after disclosing the flaw that let attackers drain more than 114 million from Bitcoin holders. The company said the review behind it was AI assisted, naming Kimi and other frontier models among the tools used to examine not just the faulty randomness code, but the whole system. The review found problems unrelated to the original bugs in the way transactions are approved, how data is handled over USB, and how firmware updates are validated. Installing the update does not make an existing compromised wallet safe. Let me repeat that. Installing the update does not make an existing compromised wallet safe. Anyone who seed or master key that controls a wallet's coins was created on an affected firmware between 2001 and July of 2026 still has to generate a new one and move their money across. New seeds now work differently. Everyone requires the owner to supply the randomness by hand, either 65 key presses at unpredictable intervals, or 50 rolls of 6-sided die, or 128 coin flips. Physical randomness is used because a die or a coin produces results no software can predict, while the flaw that caused the theft was in the device generating randomness by itself, as CoinDesk previously explained. So, new little update on the ColdCard, and good and trusty actual randomness here to save the day.
And for those who still have a ColdCard, I just put a QR code up on the screen, and you can get a Tangem 10% off by using that link. There you go. Actually, I think they're still running 20% off, plus you get 10 on top of that. So you're getting like 30% off until that they quit their sale. They started that sale, as far as I'm aware, when this ColdCard thing took place, when it all got thrown out there. So what do you think, guys? People still using ColdCard at this point? Do you think anybody hasn't heard about this breach at this point? I know, right?
I wouldn't be surprised if people hadn't. I mean, I'm sure people I'm sure Badel only knows about it because he does this show. So I'm sure there's other people that, like Badel, who don't really stay on top of the news all the time, who don't know.
Yeah, you might
Thanks for
be
the
right. And
You're welcome, Badel.
No, I think that there's just a lot of people that only like buy and sell during the bull run. And okay, it's been the bear market or the bear run for how long? They probably just put it on a wallet, threw it in their safe, and then forget about it. Until I hear other people talking about Bitcoin, then I'll look back into it.
And
No,
by
it's good.
then it might be too late.
Yep.
Right.
Good point. And listen, that you got to be a Bitcoin maxi because this is a Bitcoin only wallet too. So these Bitcoin maxis think it's all good because it's Bitcoin, and Bitcoin ain't the problem in this case. It's the device
Yeah.
that is the issue. But one more time for the cheap seats, just because you update the firmware does not mean that now your wallet is secure. No. So, dang.
Which is the wildest part, because a lot of people are just going to update and think they're good to go. And it's like, no. You got to create a whole new wallet in your cold storage and generate a whole new
Random
passphrase.
Yep.
Yeah.
And that's funny too. You'd think that they would have fixed that part, but no, you got to pull out your dice and start rolling. It's like, are you serious right now, dude?
But here's the thing. So, like, a computer can't actually produce real randomness. It does it the same way that a human does. We prefer patterns. We are a pattern recognition machine, and so is a computer. So it's really hard for a computer to actually do real randomness. And that's why a lot of those programs aren't great.
Yep. Oh, BC again, dropping it. Mic drop. So, folks, if you happen to still be using the ColdCard, get out of that or at least update your firmware, if nothing else. And hey, Steve's in the house. Appreciate you being here, my friend.
Nice
Man,
and early too.
Yeah, I know, right? Like it. All right,
here.
Sorry, go ahead. I didn't mean to cut you off, BC.
Oh no, glad to see you here, Steve Hickey.
Yes, indeed.
And we got another tech man in the house.
Yep, tech man. Got it. Of course it does. I shouldn't be here, obviously.
Yeah. you made it by the hair on your chin.
Oh man, that's funny. Well, okay. So we gave you the update on ColdCard, and guess what? Every time I turn around this past week, there's hacks and breaches and every other thing, and I'll be talking about some more of them tomorrow night. But for tonight, we got another one. You want to pull out that phishing scam that's going around there, BC?
Yeah, kind of similar to what we talked about last week, Cybersecurity firm unveils crypto phishing campaign targeting 885,000 phone numbers. Rapid7 unveiled a new cryptocurrency phishing campaign targeting 885,000 phone numbers aimed to steal investors' holding by redirecting them to fake wallet provider websites.
Yes.
Cybersecurity firm Rapid7 unveiled the new cryptocurrency phishing campaign known as Operation Asterix. And as you can see, a lot of phone numbers in several countries. The phishing campaign led to 5,576 accounts matched to users on crypto exchange Binance, which were queued for attack. While the recovered logs also showed fake emails impersonating crypto.com. According to Monday report by Rapid7, of the 885,000 phone numbers, the largest file included 316,002 German mobile numbers, which additional directories covering Hong Kong, Bulgaria, the UK, the US, and Canadian fintech companies, and additional ledger-related lists. Phishing attacks and social engineering scams drove the majority of the crypto industry's losses in the first quarter of the year, accounting for $306 million out of the total $482 million lost, according to blockchain security company Hacken. So, we talked about this kind of last week, where this one kind of shows you what they do when they actually get the information. And last week we talked about how it wasn't the actual wallet company, it was the people that shipped the wallets for them had a data leak that leaked people's addresses, phone numbers, email addresses, and then this is what they do. They take that information and they socially engineer or hack on you, the weakest link in the whole chain.
That's funny. Did you see the article I posted on X about that? I basically said, you are the weakest link. And I talked about this whole particular thing and the shipment breach, which is the shipping company. And I did, if you guys want to go back to my X, I did put a complete group of ways you can increase your OPSEC, your operational security. And it's worth a quick check of that checklist, folks, if you're not already doing some of these things. So yeah, it's like I said, it's not getting any better everywhere we turn. Yep.
Oh yeah. And I mean,
the emails have been going around, like it's been an existing thing. Like, just because you have a crypto, like they use crypto.com, so I'll use that. Like, just because you get email from crypto.com stating, the security breach or whatever, click this link to make sure you're secure. Don't do that. Go on to the actual app, because it's going to be on the actual app also.
Oh, that's it. Yes, exactly. And that's one of the key things, don't click those links. And they're getting better. I mean, I said we ain't going to talk AI, but I mean, let's be honest. It's common knowledge AI assisting with these things and making these campaigns much more successful. Matter of fact, links are in the description for everything that we show you tonight. And I think, if I remember correctly, in that article, I don't think BC actually read it, but the actual success rate is like 13.5% with the information. I mean, I know you think, it's only 13%, but come on now. You're already in that narrow pool of people that has something to do with crypto, and then you're gaining access to their crypto at a rate of about 13%. Choo! There goes the money, baby. There goes the money.
Yeah. And I mean, it's kind of sad, because I don't know how many times we've talked about security, and I know a lot of people hound on it, but people overlook the fact that they're the weakest link in the whole thing. That, hey, I didn't fully check on the email. I didn't, click the little arrow down button and see who the actual sender is and what the actual email address was. It might say crypto.com/ and then have a whole bunch of nonsense at the end that it isn't actually crypto.com. And this is how they try to get around that. Oh, it seems like it's from crypto.com. We've used AI and we've used like the actual crypto.com like images. So it looks pretty authentic. But if you go and you click that link, you're screwed. As soon as you click the link, you put in a little bit of info. Sometimes you don't even need to put in the info. I was going to say,
sometimes you don't even need to put in info. Yep.
So you gotta take full accountability, especially when you're talking about this is your money. You want to keep as much of your money as you can, because the way that the world's going, we'll talk about it here in a little bit. You need as much of that money as you can get.
Facts. And Andy, first off, I love Peter McCormack. And I'm about a quarter of the way through that interview as we speak. So far, it's amazing. So I can't wait to finish that up. But yeah, I love his show. Yep. Well, shall we move on? Speaking of which,
Yeah. Well, talking about needing money, Elon Musk explores stablecoins for creator payouts. Elon Musk's owned social platform X is discussing the use of stablecoins like USDC to pay influencers and other content providers. CoinDesk reported on Thursday, citing a person familiar with the discussion. Talks are ongoing, and X isn't alone. Its peers are also testing stablecoins as a way to pay influencers and content creators. According to the source, Mark Zuckerberg's Meta has begun paying select creators in USDC on Solana and Polygon, reviving its stablecoin push after the collapse of its Libra Diem project. Which I think it's funny that they mentioned that. What a disaster that was.
yes, agreed. Agreed.
The report comes as X changes how it compensates creators. It seems like everyone's doing that one too. The platform recently said it would phase out its existing revenue sharing program and replace it with the original content rewards program, which aims to reward users who contribute original ideas, expertise, reporting, creativity, and commentary. In March, X hired Benj Taylor to lead the design, with his role spanning X, XAI, and SpaceX. Taylor previously worked at Coinbase's Base blockchain and has experience in wallets and DeFi. And also, you have SpaceX taps stablecoins to cut cross-border payment friction, which, I don't know how deeply we really need to go into that one, but
yeah, the headline is the thing. Yeah.
Nah.
I mean, what do you think about this? I mean, do you think this is a good way to pay creators?
I mean, it's better than trying to move cash into offshore accounts because, not everyone, surprise, surprise, on X is based in the United States. So they're going to have to pay people in other countries, and the cheapest way for them to do it is something like this. So for them, it's really beneficial. I don't know if it's going to be beneficial for everyone else, depending on how they set it up. Is this going to be an X integrated wallet where it deposits into your X account on your side, and then we're going to have to worry about phishing scams on people's X accounts, or how are they going to do this?
Well, they did roll out. Was it 2 weeks ago now? They made the official launch of X Money. Which is the ability to be able to do the trading and pay and all this other stuff on X. So I would assume it would have something to do with that, even though we haven't seen official word about that yet. Yeah. Right? I mean, that would make sense. If you're already got that system in place, why not utilize it?
Yeah, which, I mean, it just seems like a way for them to get a little money on the side and then also kind of keep things more in-house, which all beneficial to them. But like we talked about in the last article, now your whole X account is going to be very coveted by scammers and things like that.
Yep.
Change them passwords.
Well, I mean, they've just changed the login procedures for X, or just recently anyway. It's a pain in the keister, to be quite frank.
Hey, the more painful it is to get into something, the better. And that's what a lot of people, kind of forget. The more of a hassle it is to log into an app or to log into your crypto and see it, the better it is security-wise.
Yep.
Oh, you mean it's not safe to have my phone and my computer synced and have all my usernames and passwords saved, so all I do is click on this button and it automatically logs me in?
I mean, It depends on how you do it, you know. You can use something like LastPass, which is
I'm just gonna
encrypted
say,
and things like that. So yeah, it'd be safe to store your passwords and something like that. Not infallible, but safer than, just having a folder named passwords that you put all your passwords in.
I remember when I first started with on the computer, I did that. I was like, hey man, I can't remember all these passwords. Yeah, we'll put them in this file named password. Yeah.
Yeah, and you would have been a mark.
Well, hell yeah.
Mr.
I've learned, and I'm like you. I use a password manager now because they're just yeah. Thank you. Thank you. But I took the moniker back. But yeah, I use a password manager now, so that would be much better. I do want to talk on this just a minute though, because I'm not monetized on X, so
It's so hard to get monetized there.
It is wicked to the way of hard. I was like very close for a while, and then they changed it all up, and then that was it, gone. But anyway, I am monetized on YouTube, right? Unless Badel starts swearing, then I'm not. But anyway, so I'm kidding. Anyway, getting paid from YouTube, it's like YouTube takes 30% straight off the top. Then they take it and they, you've got limited ways that they will actually pay you out. Usually the easiest way is to either use their Hyper wallet or to use PayPal. And either way, you're sitting there doing what? Incurring additional fees on top of the 30% that they've already stolen from you. And I say stolen because they've changed their monetization policy. For those who don't know, go check it out. Basically, they've doubled the requirements going forward for people who are not already monetized come February. And anyway, so this is a pain in the butt trying to track everything in like for my YouTube stuff. It is a literal pain until the money hits my account and I'm able to actually follow through everything. To me, I would love to see YouTube do that. They never will, because then they wouldn't have as much control over it, I would assume. But the idea of having that in a stable coin that is easily like right in my wallet, and I can just do whatever I want ASAP with it, don't have to worry about transferring it to my bank, none of this other stuff, man, that would be awesome. That would be awesome. I would like to think that this would be something that creators as a whole, not just creators for crypto, would be interested in seeing. That's why I was asking, what do you think creators will think about this? I mean, to me, I would hope that they would be very embracing of this.
I mean, it's an interesting concept. I just don't know how much I would trust having the place that I do my content also being my money manager.
Well, I agree. I wouldn't leave it there. I mean, that's why I said, where I can just throw it in my wallet, and then once I would convert that shit ASAP.
But how many people are not going to do that? That's the real question.
Oh, well, yeah. I mean,
there's a lot of people that'll just leave it on there until they need it, and then when you actually need it, you might not be able to have it.
That's true. And Andy, there's zero chance I'm giving Claude access to my PayPal or my bank or anything else. So yeah, I'll suffer. It's good.
Oh, let the AI doesn't make mistakes. It'll do it flawlessly. Give it access to everything.
Yes, let it do everything. Do it all. Do it all. Anyway, I don't know if you are an influencer and you're watching this right now. You're just kind of lurking in the background. Tell me what you think. Would you be interested in seeing payments? Doesn't matter the platform. Here we're talking about X. I know I was just saying, I'd love to see YouTube switch, but pick a platform that you might be an influencer on. Would you like to see them utilize stablecoins? Put it in the chat. And if you're watching this on the replay, put it in the comments. I'd be interested to see what you think about that. Thank you.
I mean, maybe for something like Twitch. It'd be nice to see Twitch do that. I don't know if I would trust Google, though, with YouTube and doing that.
That's why I said I'd convert that ASAP. It
But
wouldn't be in a USDC.
I wouldn't trust them with what they say, you know, because YouTube already takes the 30%. And if they're just going to pay you into a wallet that's on their app, it's like, oh, well, you know, you're actually only getting like, you get 30% and we're keeping 70%. And you won't even know.
Yeah, well, that wouldn't be anything new. It's kind of that way now. I mean, they give you your back end analytics to be able to track that, but they don't make it easy the way it's broken down, in my opinion. Maybe I'm just like BC can bring that back up right now. Maybe it's just because I'm the old man on the interweb and I'm finding it difficult to track it adequately. But to me, it would seem like I would like to think that having it that way would make it so much easier to track.
Mm-hmm.
I don't know. Maybe
it could not. It all depends on how they set it up. You know, it's like, how do you go cancel your Amazon account? Well, they hide that. Like, yes, 17 pages deep. That's how they would do it there. You know,
that's true. I just went through that with another company that I had connected to my website. I'm like, finally, I hit up customer service. I'm like, look, I don't even use you anymore. Cancel this. And they're like, well, you can cancel it in your own. Where? And it's literally this little sandwich click in a like, I couldn't find it. I'm like, it's got to be here somewhere. Sure as hell, this little sandwich thing. You click it and then it says cancel. It's like,
yeah.
Well, I watched a video last night about YouTube Premium, and it's still having ads. And it's a 42-page EULA that you sign up for and agree to, but it's on page like 40 or 41 that talks about how an ad could be sponsored and embedded into the video, so then therefore it's not technically an ad.
Yep.
And it's like, okay, who's going to read 40 pages to find that?
The AI.
I was about to give that
online.
Yeah. You know how much paperwork I give to my AI? I'm like, can you summarize this for me? Answer any questions I have too. Like, I don't want to download the PDF. Can you just read this PDF real quick and let me know what it says?
Yep. Absolutely.
So much easier.
Yep. Listen, before we get into the debt, because you know that's a depressing conversation, don't forget, smack up that like button, sub if you're new here, and share this thing out. We're trying to grow. We're here pretty much every Monday night. So we appreciate that very much. And links to all of our channels are in the description. Go ahead, sub to everybody. Thank you. All right, BC. Let's get to it.
Oh boy, here comes the fun. You know, we did bring up AI for a second, but forget AI. Debt has become the main character on Wall Street, as markets just now decided that it's gotten out of control after years of warnings. Better late than never, I guess. The enormous mountain of debt hanging over the economy has overshadowed the AI boom as the center of attention on Wall Street. For years, decades even, the spiraling trajectory of the U.S. debt fueled dire warnings, which investors consistently brushed off as low borrowing costs helped turbocharge epic stock gains. Meanwhile, the debt galloped higher, interest costs sucked up a bigger share of the federal budget, and deficits continued to expand. Rating agencies downgraded U.S. credit, and foreign central banks stopped buying as many treasuries. The precise tipping point was always unclear, especially as the US dollar retained its status as the world's top reserve currency. But the global bond sell-off this past week that sent yields to the highest levels in 2 decades showed debt is finally front and center as a concern. When does debt become unsustainable? When the global financial market says it is, which is, you know, kind of how capitalism works.
Yep.
So
And that's coming quick.
no, I mean, we've been warning about it here for a while. I mean, I personally have been warning about it for years, but it's surprising to see it all happen at once because debt worries weren't limited to the US, with yields in other top economies like the UK, France, Germany, and Japan also surging. That's as the governments since the COVID pandemic have continued spending as if borrowing costs were still at crisis era lows, letting deficits worsen as their economies were still in desperate need of emergency stimulus. But the economic landscape is totally different now. Interest rates have surged in recent years to combat high inflation, and the AI boom is pouring hundreds of billions of dollars a year into an economy that increasingly immune to higher rates. In addition, the so-called hyperscalers are relying more on debt to finance their capital expenditures, competing with treasury departments for bond market dollars. Given that public debt is already so high for many countries, it's only been a matter of time until the markets run out of patience. Robin Brooks, a senior fellow at the Brooks Institute, wrote in a Substack post on Tuesday, "It looks like that's happening now." Yields went up so quickly that the Treasury Department suddenly announced it will increase buybacks for long-dated bonds. The move briefly lowered yields, but they went back up as investors doubted such financial engineering can hold back the tide. You know, we can get into the how did we get here, but you know, we kind of, if you've been paying attention and you invest, you probably know how we got here. You know, it hasn't been a slow thing, and we've been hearing about it for years, and it's kind of sad that we've let it get this far.
I'm gonna just zoom in on that a little bit more there. There you go. See, 40 trillion.
Yeah.
Wow, 40 trillion. It really does make my blood pressure just
You know
go
what's
up.
wild? A year ago, it was 37 trillion.
Yes.
Year ago.
Yes. Well, we're increasing $1 trillion every approximately 100 days. And it's
less
taking
than
$1 trillion a year just to service the debt, which is about to increase for a lot of the reasons you just talked about, BC. And you know, the fact that, you know, I mean, don't get me wrong. I'm not saying Besson doesn't know what he's doing, but I got to believe that the playbook that he is trying to play is not going to play with the current market conditions. And the market itself understands that, like you just read, because what happened? Okay, things came down and what? Boom, right back up. And to new highs, I think, if I remember correctly, right? Wasn't it?
Yep.
Yeah.
Because here's the thing. It's like, oh, so we're going to print money to buy back the bonds. So we're going to create debt to buy back debt.
Buy back the debt.
Like, bro, at what point does this just not work anymore?
Because it sounds good on paper. That's no reason why.
The thing about it is they can stay solvent longer than we can. And that's been their whole game. Their whole game is it's like we can stay solvent long enough to keep the shell game going. But when you've got such a competitive market nowadays with the internet and things like that, and I could just invest my money in a private company that's probably going to explode because it's a tech company, or I can put my money in the US treasuries where they're going to print more money and pay me back in devalued dollars, which is what they bank on. Their whole game is, I'm going to make debt, but the debt that I borrowed now, what I pay it back with is going to be worth less than what I borrowed. That's how they win. That's how they come up on top. Because, oh, well, I borrowed $1,000, but I'm paying you back with $1,000 that it isn't worth the actual $1,000 that I borrowed. That means they win. And they're never going to stop that. And it's going to have to collapse on their heads before before we ever get to something new. And that's the biggest problem with it. They're going to keep going as if the status quo works.
Yep. Well, for them it will. I mean, the people who are going to get hurt the worst are us. The average Joe, the average worker, the person who's just getting by as it is now. You know, you got, like you said, you know, that they're buying back debt. It's nothing more than a circular file. Every time I listen to them talk about buying back debt, all I envision in my head is the snake eating its own tail. That's literally what you're doing. It's like, my God. And the problem, people are just so busy trying to get by, they don't wrap their head around what's going on because they think, oh my God, these guys got to know what they're talking about. No, they actually don't. And if they do, they're doing it on purpose. It's like, are you kidding me right now? Don't trust them.
It's like how they spent years saying that the average person couldn't invest on Wall Street, and you had to go through this company or that company because, you know, the average person can't understand this stuff. So you need an investor, and you need one of these certified creditors to invest your money for you. And then 2008 changed all of that.
Yep.
The craziest part is the only thing that's going to change our current system is our current system totally crapping the bed. And that's scary. That is absolutely scary. The pandemonium that's going to cause.
Mad Max time.
Yeah.
Literally. Mad Max time. So beside gold, silver, and maybe some Bitcoin, pew-pews. Just saying.
Bullets and seeds, as Piper likes to say.
Yeah, there you go. So tell me, guys, I know we're about to bring up about Wall Street and how Bitcoin did its big surge. I mean, everybody was all excited with regard to Bitcoin. Hey, not Mark Dutch in the house.
Yeah. It's obviously not Mark Dutch.
No, come on now. Come on. Anyway, I know we're about to look at that article and all that kind of stuff, but do you think that Bitcoin is where people are going to go, or do you think it's going to be more gold and silver?
It really just depends. It depends on where you are, what you're kind of interested in. But I do think that all of these are going to be highly viable options. You're going to have Bitcoin, you're going to have gold, you're going to have platinum, you're going to have palladium. Palladium is a very, very good one as well. A lot of people don't know about it. Really good one. You've got copper as well. Less so a money saver, but also a good option. You've got oil, and if you trust the stock market, or if you can actually get into physical oil, that'd be your best bet. A little harder for some people than others, but there's plenty of options out there. Energy, also a great place to put your money, as all of these other things kind of slowly crap the bed. Keeping your money in money is going to be less of a viable option because as your inflation accelerates, because here's the thing, is inflation is 2%. But what is inflation? 2% on 2% on 2% on 2% on 2? That's not 2%. This is compounding. And after a certain point, it's going to get to a point where if I leave the dollar in my bank account, it's not going to be able to buy the same thing next week as it could this week. And that's when things really start getting messy.
Yep. I agree. We got scary times ahead, folks. You got to be prepared. And diversification is going to be the key. And you're not wrong with especially if you're able to invest in stuff like BC just said, those precious metals like palladium. Yep, absolutely. Energy. I mean, we've talked about energy here, from nuclear to many other things. And I still think nuclear is a good play, in my opinion, with what's going on. But
Yeah. I mean, as solar technology gets better and better, it's also a very good option. There's plenty of companies out there. I've been working on some alternative energy lists. It's still not where I'd like them, but eventually, as the technology gets better, I would consider investing in it myself. But
there you go. Nice. Oh, I don't know. Like I said, blood pressure. Blood pressure.
I don't plan on sending that to the downside because we got this one right here. Why Bitcoin suddenly exploded to $78,000. The Treasury just blinked. And this is a build-up on the last article. You know, Bitcoin is trading near $78,000 on August 21st after one of the most violent rallies of the year, up roughly 18% in 48 hours and 24% on the week, punching through $70,000 for the first time since late May and leaving the 58K capitulation lows looking like ancient history. Here's the part that matters. The trigger wasn't an ETF headline or an adoption deal, it was the US Treasuries. The US Treasury just blinked and Bitcoin noticed first. This week, the Treasury surprised markets by doubling its long-term bond buybacks from $2 billion to $4 billion per session, directly targeting the 10-year, the 20-year, and the 30-year sectors after the 30-year yield spiked to 5.337%, a roughly two-decade high on sticky inflation and war-driven energy cost. The yield promptly crashed below 5.19%. Treasury Scott Bessent says he has a big toolkit to keep addressing rising bond yields. Scott Bessent's U.S. Treasury Secretary, call it what it is, the government is stepping into the market to buy its own debt and inject liquidity. Bitcoin bulls heard one thing, more of it coming, and they responded the way they always have.
Print to go. That's what they heard.
Yeah. I mean, we make fun of it about, you know, it used to be the little Jerome Powell spinning the money wheel and the money going, but like this is what the government has always done. And you have always seen these more secure assets kind of front run these moves. And you'll see it kind of spread out to other more secure assets, but since Bitcoin has been around, Bitcoin has front run your money cycles, and that's the thing to pay attention to. I don't know if we're gonna get another dip. We usually see a little bit of a more extended bear market, but if this is the game they're about to play here, then expect Bitcoin to kind of maybe start its bull market a little early here.
Well, that's what a lot of people are believing, obviously, already. But there was a couple of points I want to just bring up. One that you read and one that wasn't in that particular article, but it happened later on. He went on another interview after he gave that statement about basically saying $4 billion, raising it to buying $4 billion worth of debt, and basically said that, well, you know, and if we have to, we can like increase that to more. Okay. Talk about let's speed run ourselves off a cliff. Just saying. And then in that article you read where he said that the Treasury has this huge toolbox at their disposal to fix this issue. No, they don't. No, they don't.
Here's the thing: is they do, they just don't use it. They've got a lot of tools that they could actually use. And if Scott Bessent had actually stuck to what he had said and, you know, we're not going to print new money, then all of this would not have been a problem. You could have potentially fixed some of these problems. It would have been a slow fix, but it's been a slow break. If you expect that this big problem here of $40 trillion is going to be fixed overnight,
Oh God.
you're done.
Well,
But if you think that you can fix it slowly, year by year, the same way that we built it up, using all of the tools in their toolkit, besides just printing more dollars to buy the debt, then yeah. But that's
their
what
only
pissed me
major
off.
tool, though, is to use GDP to grow their way out of it.
Yes.
And I don't see us having that kind of surge in GDP. I mean, do you think so? I mean, BC, you follow these markets closer than me. You see something I'm missing?
I mean, it depends on how quickly you can have AI enter the market and exit the human capital.
Fair enough. Fair enough.
That's the big if here. So we're sitting on a nice little teeter-totter where you've already seen, I think, somewhere around 60% of HR employees lose their job to AI HR.
Yep.
If you can accelerate this even faster, yeah, the small person's gonna, eat the crap sandwich, but the markets would be okay. On the backside of this though, now the markets that are doing okay are going to have to pay for the people that are eating the crap sandwich.
There you go. Which plays into why who was it? I think it was the OpenAI guy, Sam Altman. What didn't he propose taxing AI or something? If I remember correctly. Okay, it sounds great, sounds altruistic, but first off, these big companies ain't going to be the ones paying that tax. It's going to be the me and yous who use it to help keep our business afloat that are going to end up paying that. That's the reason you just said. That's the why that we hear stuff like that, because you're right, BC. It's only going to accelerate, and I agree with you. If the I want to say AI bubble does not burst, and it does hit the ground running the way they're hoping it will, then maybe.
That's the big. See, this is the big gamble that they're playing, and honestly, it could get really, really bad, market wise and cost wise and inflation wise. But as long as they can stay solvent enough to get to the other side, none of this matters.
Fair enough. The other key to that is, in 2 years, we got another administration coming in.
But I mean,
it's going to come and change the direction of the ship, don't you think?
No.
I mean,
it's like, here,
you don't think so?
You don't think that the other, say we have an administration shift and it goes from right to left. Do you think the left is less bought by the AI companies? Do you think that the left doesn't also have their tech oligarchs?
Oh no, that's not what I mean. That's not what I mean. What I'm saying is that they'll move, in my opinion, they'll shift the policies that are putting us on the hopeful fast track for AI to raise the GDP high enough to kind of soften the blow. Let's go with that. We'll go with soften the blow as to what's going to happen. I see that because it requires, like you said, BC, it requires a slow build, and we get 4 years of a build, and then a year tear down, and then they rebuild something different. You know what I'm saying?
I mean, it depends on what they're tearing down. I don't see them putting any halts on the AI entering the workplace. I don't see them putting any halts on robotics entering the workplace. I mean, they didn't put any halts on the cheapest labor they could find entering the workplace. Why would they put halts on even cheaper labor entering the workplace? So if anything, I would see an acceleration they would probably sell it as a humanitarian thing. Well, it's like, well, you don't need to work 40 hours a week. That's atrocious. No one needs to do that. Just let the robot do it.
Yes, enter UBI. Yes.
Yeah.
That sounds more like I think it's the leftists.
Well, and that's what what we're going back and forth with here at this point, Badel. So you're right at it. I don't know. It's going to be. We got some interesting times coming.
I mean, I think if we get a party change come presidential election, we could see a big swift change in a lot of stuff because the governor of Illinois, he's talking about running for President Pritzker, and it's like nobody in Illinois really likes him. He only gets voted in because of Crook County, like that's it. But he's all for the AI data centers, and it's like us, citizens are the ones that are protesting and going to the meetings and protesting it. Well, he just sits in his tax-paid home, going, just put them in, just build them, enough with them, just put them in, give them all the tax breaks they want. We need them. It's like,
but here's the thing, you really do. If you want this shamble, this house of cards that they've built to continue without absolute mayhem being upon every single person, then you need them. And you need them quickly.
Yes. Oh, you're right. Absolutely right. I don't know if I'd go without absolute mayhem. Minimal mayhem. How's that?
Yeah.
Minimal. Listen, you want to hit that last piece and then we'll wrap this thing up because I love this discussion, but we're getting there. It's almost an hour.
Oh yeah. Well, let's just hop in the actual, middle of the article where everything is getting juicy because we already touched on the beginning part with the other two articles. With the U.S. total U.S. national debt going past 40 trillion this week, well before forecasts, the cost of debt repayments is becoming punishing even for a country as rich as the U.S. The interest bill alone is estimated at $1.2 trillion this year, and as bond yields climb, it is rising all the time. We may see more policy moves this week. We have a big toolkit, so we'll see. Basent said in an interview on Thursday, it is not hard to imagine what he had in mind. The Treasury would buy up more bonds directly. It would try to bully the Fed, now under the control of Trump's hand-picked chairman Kevin Warsh, into buying more government debt with printed money if necessary. It could try to lean on other central banks around the world to buy up more U.S. bonds, or it could simply try and bully the markets into submission. We will find out in the next few days. The real question, however, is whether it will work. Perhaps to some degree, Basent is just doing what comes most naturally to him. As a key executive to the prominent hedge fund trader George Soros, the man who famously broke the pound.
Yes.
If you have not heard about that, look into it. It's a wild story, but in 1992, Basent's instincts are to intervene in the market. He's good at it, and he knows where to catch traders and banks off guard. The trouble is, clever financial tricks are not going to work. Sure, it was effective for a few hours, and yet the yen is already back below the level where the US started to wade into the market. And it only took a few hours for bond yields to start rising again after Basent's first round of intervention. The core problem is this: governments around the world have borrowed too much for too long, and the U.S. is guiltier than most. It took almost 200 years for the U.S. national debt to hit 20 trillion, the level it reached during Donald Trump's first term in 2016. It only took a decade for it to double again. The debt percentage to GDP hit 126 points, higher than both Britain and France, two countries that are regularly targeted by the bond markets for their excessive borrowing, and behind only Japan and Italy, among the major world economies. Perhaps most alarming of all, borrowing is still forecast to hit almost 6 points of GDP this year, even though there is no major economic emergency to deal with. And the growth is healthy. Ronald Reagan, the 40th US president, used to joke that the deficit was big enough to look after itself. Unfortunately, that is no longer true. It turned into a serious problem. We kind of see this all over the world here. Where was it? 27 points to GDP for Britain, 36 for Britain, 45 for France. All of these major economies are playing the same game. And what it was talking about in that article was Japan's yields. We bailed out Japan, and then it immediately went right back to the crap stage that it was in before we bailed them out.
Yes.
And that's the game that they've been playing. One government bails out another government, making debt, which we then turn around and buy up by printing more money of our own money. And the shamble can't last forever.
Exactly.
And even like I said, Basent can't fix it because you can't do these fake fixes. You actually have to fix the problem. You can't put a Band-Aid on.
They're not interested in fixing the problem, is the problem.
Mm-hmm.
And until people are in DC who are interested in fixing it, forget about it. We are heading, again, ever so quickly to that cliff, and we are about to go over.
But it's like I said with the last one. If they can play the game well enough, and they can get human capital out of the markets, and they can get their robots and AI into the markets, this would drastically help them. You're talking about less money being spent, and then also less debt. Because you're not floating a bunch of these things, you're not subsidizing a bunch of these companies, you're not building a lot of these problems. The next problem is just going to be, how do we pay for the man that we just took out of the market?
Right. And that's where I was saying earlier, enter UBI. Because that's what's going to get pushed. They're not going to have a choice, because other than that, pitchforks and the torches are coming out in the streets.
Pitchforks and torches. Yep. Guillotines and cannons and warships and yeah.
Yep. Facts. And listen, we had a bunch of people jump in. I know we didn't acknowledge everybody. Jesse, hey, thank you for resetting that up. And yeah, I'm going to send you that link for Crypto on the Rocks. And like I said, tomorrow, hopefully, God willing, I don't forget. Shuby jumped on in here. Appreciate you being here. All set. You guys are coming in, but we're wrapping it up here. But we'll be back maybe next Monday. We'll see.
Definitely next Monday with some robot news and some AI news, and it'll be fun. Little less scary, maybe. I don't know. I can't promise that, but
hey, maybe next week I can check on the horse, that I've been kicking. That's going along.
You can keep kicking that can. It's not gonna.
Oh.
Well, it turned into a joke, I feel like, for 20 seconds every week. But now it's just kind of like, all right, it's been long enough. All right. Maybe
At this point, put a fork in it at this point.
Yeah. He kicked the horse until it was dead, and then he pulled out the shotgun and decided
he was going to drag the head around with him. Yeah. Basically. Well, anytime we talk about AI, that's what you can pull out the head. But anyway. So, all right, let's wrap this thing up. BC, anything you got to throw out for the peeps before we head out of here?
Well, I'm working on some things, so I'm sure Piper will have some things to say about it coming soon. I won't tease it all, but big things are coming to the DCA Piper plan. I'm also working on some stuff with LBC, so. Cool. I will have to we'll probably do the recording this Sunday. I was a little busy this weekend, and then I had some schoolwork. So this week I tried to get ahead on schoolwork so that I could have some time this next weekend to sit down and record. And then I'm not sure exactly when I'll start my new show. Still getting into the swing of things and ironing out the details for my new show, but looking at doing a Tuesday, Thursday, Saturday show. More based on, what I like to do, investing, instead of, sitting down and like, let's look at the 1 minute chart. When do we enter? When do we exit? We're looking at what's a good buy, what's a good sell, how do we leverage our account in such a way that our risk appetite is met. That'll be more what that show is about. So stay tuned. I'll have more information for y'all next week.
Nice. Badel, anything for you? Do you want to throw out there? No? All right.
No,
fair enough.
Not really.
I was going to say, tune in Friday night, see what else Badel's done on the 3D printer.
Well, in case of people weren't here on Friday.
Oh, yes.
Jesus.
And if you missed Friday, you might want to go back and check it out. It was quite the interesting conversation there. And Wick's wife in the house. Appreciate you being here. For me, just so everybody knows, tomorrow night, Jar and I will be live 6 p.m. Eastern time. Friday, for sure, with Crypto on the Rocks. Now, the following Friday, I think, is... hold on. Before I'm saying that, because I've got Boston Blockchain Week coming up. No, that's the following week, right after Labor Day. I don't know if we'll be here for Labor Day. We'll let you know. But right now, we will be back next Monday. No, okay. Hey, I'm good with taking Labor Day off. I'm going. That gives me travel time. You know what I'm saying? So I'm okay with that. But while at Boston Blockchain Week, I might be doing a live from there. So watch for that. We'll see. I got to see what the setup is because they actually changed venues. It got so big they could not host it where they originally had it. So I just got that notification. So I'm unfamiliar with the new venue. I'm going to try and actually sneak in there ahead of time and try and figure out what's going on. So, all right. So stay tuned for that. That's it, folks. Appreciate everybody being here. You know the drill. As you're heading out, all of our information is in the description. Go ahead, follow everybody, appreciate all of that. And I say it's time to dance. You guys agree?
Sounds good to me.
Have a good night, everybody.
All right, have a good night. Good week, everybody. Take care.
Yeah. Screens glow. Timeline scream. Same fear. Different day. Lock in. HODL the line. Don't blink, don't fold. Hands stay steady when the stories get old. Charts go wild, but the taste is fine. Mindset, grounded, battle calm. BC breaking down the noise. Hold the line. Yeah, we ride that grind through the fear, through the foot, through the echo chamber signs. They panic, sell. We design the climb. HODL the line. Yeah. HODL the line. Old school charts in a new age storm. Seen cycles born, seen cycles torn. Zoomed out vision, long-term frame. While the feed chases candles, he studies the game. Macro whispers, history rhymes. Patience weaponized over time. No panic button, no rush to speak. Just facts stacking up week by week.